Alright guys, Jason Graystone here. I wanted to put out a video following today's London live room session because not only did we get involved in a couple of trades, one day trade, one swing trade. It was a very profitable day. We had 102 pips to target one on the pound yen bat formation. I'm not going to go through that in this video though. What I'm going to go through is a day trade that we took, which was a trend continuation trade down on the lower time frames, on the 15-minute time frame. And I want to run you through how we went through, how we analysed our entry for that trade, and get into detail on the importance of sticking to a plan. Because I had a message later on from a member who was in the room saying, "Jason, how's the trade going? You know, how did that trade see you out?" And I said, "I'm still in it." And they were like, "Oh yeah, but it's pushed up, the price has moved up, it'd be a shame, are you going to take profits early? It'd be a shame to be up 30 pips and then lose 20 at the end of it." And I said, nope, I'm either going to hit targets or I'm going to hit stops. And the only time that I'll move my stop loss is if I become within 2 pips of my target, right? So, and the answers back was, wow, you know, that's real discipline. And I just want to demonstrate the importance of sticking to a plan and why it's so important once you've developed a system and you have a positive expectancy and you've tested that system, why it's really important to trust that plan and stick to it in order to generate consistent profits and not end up blowing your account. So I'm going to walk you through the trade, the setup, and how we waited for price action to come down to us. I wasn't in a rush to get involved in a trade. I didn't want to just be in a trade so I could ring my mum and say, "Mum, I'm in a trade," you know, ring my pals, "Yeah, I'm in a trade." I don't care about any of that. In trading, less is more. You want to wait for your rules to be met before getting involved. And I know Akil talks a lot about sticking to a trade plan. Any successful trader out there will tell you the same thing. It should all be rule-based. You know, there should be no ambiguity or subjectiveness to your trading. And it really is the only way to generate profits from the market. So I'm going to walk you through the trade now. So we'll go over to the charts. And essentially we were looking at the Aussie dollar. Now we went down to the day trade, the day trading time frames, down on the 15-minute time frame. And we was looking at this trend. Okay, so we're going from the bottom left to the top right, which is bullish, right? In case you didn't know. And if you know and understand how to read the basics, you know, how to read a price chart, you'll see that we started to put in new structure highs. Okay, new structure highs, held this outside return here. Then we put in new structure highs, higher lows, new structure highs. Okay, and we were around this level here. Okay, so at this point here I said, well, if we pull back down into previous structure resistance should become support, there may be a day trade for us at this level. So the first thing I do, as you guys know if you've watched any of my videos, is build out the initial kill zone. And the initial kill zone is based on, I'm just going to take these lines off here. The initial kill zone is based on the previous new structure high to the outside return. Okay, as long as we don't break and close below this low, this is still a valid outside return, and I can look to take the trend continuation trade anywhere in this initial kill zone. Now, I call it an initial kill zone because if price action just pushes down into this zone here, where resistance should become support, well, if I'm a trend continuation trader, so I'm only looking to shoot for a retest of the highs. So if I'm looking for a retest of the highs, which is up here, and I'm going to draw over the chart a bit, guys, because I didn't record the actual session. So, you know, I'm going to have to draw over the candles a bit. You're not actually going to see this in real time, but I'm going to walk you through the trade anyway. But if I'm a trend continuation trader, I'm only shooting for a retest of the highs. Okay, so I'll have my profit targets at a retest of the highs, and my stop loss would have to go below this previous outside return. Now, in this instance, I used an ATR based stop loss. It was 10 pips. We had our stop loss placement looking to go 10 pips below the low, which put us down at 72.68. So at that point, I said to myself, well, where can I enter that's going to give me at least a 1-to-1 risk reward? Because I need a 1-to-1 risk reward minimum. Okay, so I brought on my stop loss placement, Use that fib tool just to give me that 50% so I don't have to work anything out, 'cause I'm a simple guy like that, right? And we worked out where the stop loss needed to go, and we worked out where we needed to enter the trade as minimum to get a minimum 1-to-1 risk reward. And you can see it was around this area here. So my initial kill zone then gets narrowed down slightly to 72.96, because at that point I know I'm going to get a minimum 1-to-1. And you can see this is all very rule based, okay? So if price action pushes down, I draw out the initial kill zone. If the kill zone starts greater than with an inverse risk reward, I build out the risk reward, work out where my stop's got to go, make sure I get a minimum 1-to-1, and then I just wait for price action to come into this kill zone. Now, once price action pushes into that kill zone, do you think I just enter aggressively? No. Now, some people do. Some people wait for RSI to go oversold, which I do on a higher time frame and my swing trades. But on a lower time frame, when I'm taking these day trades, I'm slightly more aggressive, but I do look for a higher high, higher close candle entry. And I've done a video on this before. If you haven't seen that video, go over to the other videos on the channel and check that out. I think it's called a simple entry technique. So be sure to check that one out after this video. So what we were looking at is price action to come down into this zone, and you can see we started to push down into the zone, right? Didn't quite get into that area there. We spiked down and tested it. And what I need to happen in this pink zone here is not only price action to push down into here, but to get a higher high, higher close candle in this pink zone, right? So all we did was we sat back, we watched price action, we pushed right down into the zone, and you can see we didn't get a higher high, higher close here, we didn't get one here, we didn't get one here, and we didn't get one here. And as price action pushed on, bang, we got one, right? We got a higher high, higher close candle here. Now, do you think I entered this trade at this point? This would be an at market order, so I would have bought this. I'm looking to buy this at market when I get a higher high, higher close candle. Do you think I bought this? No. The reason I never bought this is because it's not in the kill zone. So I know that if I took this trade and say I was only 50%, or I was right 50% of the time, and every time I take this trade, I'm losing more than I'm winning when I'm right. So when I'm wrong, I lose more than I win when I'm right, because this is less than a 1-to-1 risk reward. If I did that every time, that wouldn't set me up for success, would it? So I have to have a minimum 1-to-1. Therefore, I didn't enter on this higher high, higher close. However, as price action moved down again, we come down into the kill zone. I'm going to extend this across a bit. And let me just move that there. And you can see, bang, this candle here, this green candle here, put in our higher high, higher close. And by higher high, higher close, let me zoom into this. By higher high, higher close, I mean we closed above the high of the previous candle. So here's the previous candle. Here's the candle, the entry candle. So I entered at 72.92. Bang, rules met. Watch the trade. And there you go. We came out. We left the trade. Our profit targets were on. I entered at 72.92. Exited the trade actually at 73.25, giving me 33 pips. So, you know, I'm not shooting for any extended move or anything like that on these day trading time frames. I don't want to be sitting in the markets all day looking at these lower time frames. I'm one in, one out kind of guy on these lower time frames. On my swing trades, I take, you know, multiple targets, but on the day trades, I just shoot for one target. And I just wanted to show you the importance of sticking to a plan. Now let's take it the other way. So if we were to wait for this setup to happen, you know, my trading strategy is all based on my historical sampling, my historical testing. I know that I'm right more than I'm wrong. That's just the type of trader I need to be. It sits well with my psychology. Some people can take 3 winning trades and be wrong 7 times and they still earn a return on investment, but then they're happy doing that. Psychologically, it doesn't sit well with me. I need to be right more than I'm wrong. So every strategy I've tested has a positive expectancy, right? Now, the importance of sticking to a plan is, if I was to take this trade every time we just made a small pullback, so we looked for the higher high, higher close, higher high, higher close, if every time price action just got a little pullback into previous structure, resistance should become support, and I bought this up every time, well, you know, if I did that every time and had an inverse risk reward every time, or maybe you're a rookie trader, you know, you see these rookie traders, what actually happens is price action starts to push down, and what they do is they move their stop, and they move it lower and lower and lower. And they're convinced that market's going to turn around, and price action continues down, stops them out. And on the other hand, when price action starts going in their favor, just like the message I got today, they end up taking their profits early because they can't bear to think that they're up in profit, but they might lose money. So it's very funny how human beings work, because they're willing to move their stop loss to risk more, but they're not willing to keep their target profits where they were, which means they end up taking this much. When they're right, they end up taking this much profit, and every time hitting this much loss. Okay, now how many times do you think you've got to do that in order to blow your account? Not many, right? Not many. So I just wanted to share the video with you. It really is important to stick to a plan, and you're not going to be able to trade any trade plan until you have back tested. Okay, everyone at Trade Empowered wants to give as much value as possible to everyone, steer you away from, you know, certain businesses that are trying to flog you a course and take your money and not really give you any real value. We are dedicated to showing you, you know, all the basics, what trading's really about, complete transparency. I'm not going to sell you any dreams. It's just how to treat trading as a business. And unfortunately, you're going to have to do your testing in order to get psychologically right for trading. Okay, there's no other way about it. You're not going to be able to psychologically sit for a drawdown if you're thinking, I have no idea what's likely to happen next. Whereas if you've done the back testing, you can look over the last 5 years and say, well, 2 years ago there was 7 losing trades in a row. 1 year ago there was 5 losing trades in a row. 3 years ago there was 8 losing trades in a row. I've lost 4 losing trades in a row. This is perfectly normal. And although it's not easy taking a loss, it's, you know, the story you're in. So you're not reacting in a moment. You're not all panicky, and you're not sort of wondering what's going to happen next. It prepares you mentally for the trade. So hopefully you got value from this video, guys. Stay tuned for more videos to come out on this channel. I know Akil releases one every single Sunday, normally midweek to Thursday as well. Charles releases videos on this channel as well. And also, I release channels typically every Tuesday, Wednesday, but I'm doing a bit more as it's a new year, new start. And don't forget to check out my own personal YouTube channel as well, if you're not already on that. So until next time, guys, be safe, take it easy, and good luck in the markets. See you then.